Hey guys, Max Spxt. Hope everyone's having a good night. Sorry this report's late. I had a little problem with the IWMY spreadsheet. Let me show you what happened. This right here. So they sent me this to work with. This is all the trades, and it's more trades than usual. It looks like they opened up a position and then closed a position, then opened up a different position. They usually don't do this. And that's no problem. We can handle all that. But they did not put a quantity in here. Between the BC and the price, it usually has a quantity. So anyway, so here's what I did. Just so I could get the report done, I used the prices and put it in as if it were one share or one contract. If I did zero, I messed up all the calculations. But anyway, so these calculations still won't be accurate with regards to with regards to a lot of stuff, but as soon as I get the real number, all I have to do is input it in there. So hopefully they'll have this corrected by the morning. I sent their customer service an email and made them aware of it. Hopefully they'll have this corrected in the morning, and then I'll just update the numbers and put it on my morning report. Let me show you guys something, because I had a question about this. Okay, so see up here where it says estimate 90%, $1.14. What that is that's the estimate of the dividend, and I don't know what formula they use or anything, but all that is it takes they've put it out there before that they just pay 90% of the extrinsic capture. So I take all the extrinsic income, which is the out of the money portion of the option, or it's also called time value, and I take all of that and add it up and do it in a cents per share. So far this month, they've caught 97 cents per share of extrinsic income. Well, they've said they want to pay 90% of it. However, the month isn't over. So my friend Corey from Happy Camper with Dividends helped me put a formula in here that can adjust and can figure out how many days are left in a month. So what portion of the month is gone. The formula spits out a multiplier. So if we're halfway through the month, the formula will spit out 2. So we multiply this. You know, if we were halfway through the month now, this would say $1.93 or whatever double of that is. What is that? $1.94. Yeah, it would say this would say $1.94 for halfway through the month. We're way more than halfway through the month. We're like 80% through the month. So that's why this $1.14 is only a little bit higher than 97 cents. When we get in the last day or two, these numbers will converge and basically be within a penny or two. But right now we're looking like we're good for $1.14. I don't always mention it in every update, but every time I show these spreadsheets, you know, I talk about this, and then I always flip over here and say they're going for a total of $1.5 million. Then I look at the earnings per share. But I know people look at that, but that's the number to look at, either that number or that number. And that's why I highlighted it in green so people would know. So anyway, but what I did do with this IWMY is I went ahead, we can write the profit box. Profit box doesn't have anything to do with how many contracts they had. So anyway, that's the profit box for tomorrow. They sold the 2105 strike. Who knows how many times? Probably like 650 times. So that makes 2105 the max profit. They sold it for like $10. So you take 2105, subtract 10, and it gets down here to 2194 and change, because it was 10 and change. In any event, that's why the box is 10 and change points long. That the more they get, the bigger the target is. If they land anywhere in the box, if the price lands anywhere in the box or above, it's a profit. The bottom line of the box is break even. The top line of the box is max profit. So, where there really is no max profit. The top line there is a max profit. The top line of the box or above is max profit. All right, so let's see what else we got here. Let's look at SPX. This is what the Jeppy traders trade. There's profit boxes all over this darn sheet. This is IVVW's profit box. It got blown out. These red profit boxes aren't really profit boxes. They're a spread that Spxt does. I'm figuring out right now a better way to handle the Spxt situation. I love covering Spxt. I love Spxt. I'm going to do something different with it. But it's kind of cool to see where they sell the spreads. But basically, it looks like they sell the spreads about the same place that the put selling fund sells the puts. When they're puts, they're slightly out of the money. When they're spreads, they're slightly out of the money. The spreads are slightly out of the money, and just like the puts. So the boxes end up being in roughly the same spot most of the times. The confusing thing about it is on the SPY-T, you don't want it to land in the box. I mean, you want it to just go as high as possible. It's still a bullish fund. The box just gives you some income, but there is no max profits. You just want it to go higher. So the box isn't the best illustration. So I'm going to have something new on that soon. Something a lot simpler. I'll probably just start keeping a SPY-T spreadsheet, to tell you the truth, and I'll just have what the current dividend's going to be. It'll have the extrinsic that they've captured so far for the month and what the dividend's going to be. And I may just stop putting the box on the screen, because it's a different situation. All right, so here's Nasdaq, and there's their profit box for tomorrow. Evidently, they sold the 18, probably 390. Yeah, it was the 18,390, and they got like more than $100. Or no, they got like $97. I'm trying to do this without going back to the spreadsheet. Let's see if I'm close on the 97. No, 93. I did it in my head real quick. Anyway, they sold the 18,390 for 158 times for 93.20. You had to subtract 93.20 from 18,390 to get the break even. So that break even right there, if we went back and looked at the box, that would be the bottom line of the box, 18,296.80. The top line of the box would be the max profit, which is 18,390. Anyway, if they do achieve max profit, it's $1.4 million winner, which is what they made today. 2 days ago, they made 2.2. 3 days ago, they made $1.3 million. 4 days ago, they made $1.8 million. These guys have been killing the game lately. Now, they started off cold. They went through a 10-day streak where they lost 7 times in a row. Like I said last night, not 7 small losses either. They lost $5 million, 3.7. 2.5. Those are gigantic losses. $1 million, no big deal. They lose $1 million all the time. But when you start losing $5 million, that puts a hurt in the month. You can see when that day they lost $5 million, they were positive earnings per share on the month. The $5 million loss was a 28 cents per share loss. It took these guys from 14 cents a share positive to 14 cents a share negative in one day. And then they won the next couple of days and got out of the hole, but then they started losing again. And then they just went further and further in the hole, and then they kept losing. Then they lost $1.8 million, $250,000, and $2.5 million in back-to-back days. And that took them from 4 cents negative to 30 cents negative. That was a 26 cents a share loss. In any event, they've been digging their way out of that, and they just got out of that 2 days ago. After today's profits, they have 8 cents a share positive, and after tomorrow's, if they get them, they'll be at 16 cents a share positive. So their extrinsic capture. Let me make sure this is up to date. Okay, so they're looking at 78 cents right now. Let me make sure this one is correct. All right, these guys are looking at 56 cents, 78 cents on the triple QIs. Look at this one, $1.14, and I haven't even put in today's trade. I mean, I've only put it in as one contract, where they probably have six or 700 contracts. So when I get the numbers, I'll put it in. But anyway, before today, in any event, they were at $1.14, which isn't too bad. Or actually, before today, that's not right. Before today, they were a lot higher than that. They were at $1.29. But then after I added today's in, because I only used one contract, it added a little bit of extrinsic, but not very much. And then by the time it did the math, it actually brought their yield, their projected yield down. In any event, we don't even need to talk about these guys. Okay, so let's see what else is going on. What else can we look at? Okay, here's Tress. Let's see what's going on with Tress. This is the Treasury Alternative Fund that kind of lives in the Valley of Death. They sell the 93 put and the 93 call in a near week, and then in a further week out, 2 more weeks beyond that, they buy a 92 put and a 94 call. They're selling a strangle to finance buying they're selling a straddle to finance buying a strangle. And not only that, to finance buying the strangle twice. They have twice as many strangles as they have sold straddles. That's why the Valley of Death is so big. The Valley of Death is also related to volatility. This right here is a long volatility strategy, where everything else that I've talked about tonight is a short volatility strategy and profits from volatility going down. This spread will profit from volatility going up. So let's simulate what happens. See, if the volatility goes up, here's the implied volatility, it's 13.5. Let's say something happens and it jumps to, tomorrow the VIX jumps to 20 or something. Boom, these guys go from being in a losing position. Well, hang on, let's put this like this. All right, here's what it looks like. Here's what it looks like now. These guys are down about 9 or 10,000, right? So in the morning, something happens, the volatility jumps from 13 to 18. Happens all the time. That's not too much of a, that's not projecting like, that's not too crazy. All right, so there it is, 13 to 18. Well, boom, that's the beauty of this trade, is because then no matter where it goes, you can't lose. I'm always joking about this trade being in the Valley of Death, and it does spend a lot of time there. It's there right now. What happens sometimes, let's watch, if volatility goes up a little bit, and then as time passes, you can have what's called an island of mercy. And the island of mercy can appear, and that can also make it profitable. So if we get a little bump from volatility, even if the price stays still, or if we get a bigger bump from volatility, or let's just say this, or the price moves. If the price moves, even if we don't get a bump from volatility, if we get a big price move, if the price, if we have some kind of black swan and the Fed says they're going to lower interest rates or something, and boom, this goes up 5% in a couple of days. It's a $30,000 winner. Now, of course, if that happens, it would probably also knock volatility up. So that'd be a double winner. But in any event, this is just a long volatility play. It's a hedged position. You aren't really long and you aren't really short. It's delta neutral. You're kind of pulling for a big move, but not really to one way or the other. You just want a big move either way, or a jump in volatility when you're playing this strategy. I call these straddle strangle swaps, but there's lots of different names for them. I just noticed this is wrong. But in any event, I'll fix that later. It's nothing crucial, nothing too bad. All right, so let's go over here and check out the buffer report. So this first chart I always show every night, and it's not working right now, but it's just that's supposed to be the change from last Friday. It's just this week's change, and I don't have any idea what's going on with it. But anyway, so let's just go to today's change. Okay, well, what did well today? Well, IQQQ did pretty darn well. I'll say that for sure. FEPI had a nice day. Good job, FEPI. Nice job. WiMAX had a nice day. Somebody asked me to start covering WiMAX more. Well, I've already talked about this. And my answer to that is go watch Corey, the happy camper on dividends, because she covers it better than I do and has better technology and stuff. However, she gave me a piece of technology last night and a code to put in my spreadsheet, or a formula, and I'm going to try to build something, and I am going to start covering WiMAX in more detail than I do now. Right now, I just show how it's doing compared to the underlying in the buffer report. So next week we are going to have more YMAX content. I'm going to start predicting the dividend in that stock. So YMAG just didn't look great today, but they have less stocks in their universe, and one of them was down really big. Well, let's figure out which one it was. It was probably Apple, right? I guess they had some kind of antitrust problem today. Speaking of Corey with Happy Camper with Dividends, I was listening to her coverage today of YMAX, and she's so good at that. She was the one that mentioned something about Apple had a I think the Justice Department brought some kind of antitrust deal. Anyway, they're going to have to answer for it, so that's what knocked their stock down. I hadn't heard that yet, but that makes total sense. That news came out, and this is where the buffer really helps you out, though. Look, the high yield stock's down less. People think these high yield stocks are risky, but they're actually less risky than just owning the underlying by itself in a lot of ways. All right, so let's look at Tesla. Tesla was down 0.6%, but Tesla was down 1.5. That's a big difference there. Nice job, Tesla. Tesla also outperformed TSLP. You can see TSLP, which is the curved Tesla high yield fund, picked up a lot more downside. And I would expect that because TSLP uses monthly options, and monthly options are not as good on the downside. But they're better if the market's going up, but worse if the market's going down. All right, so MRNY had a really nice day. Square had a really nice day, or Sky. They both had a nice day. Misty was a huge standout. Now I started putting clip up here. I need to make this better too. I'm going to work on this report this weekend also. But this is better than it used to be. Do you guys remember when we used to do it like this? I used to come up here and I used to say, okay, now that's a bad example. Where's my change? I don't know where the change is. Anyway, but I like here. Or like here. I'd say, okay, well, let's look at, let's look at JEPQ and JEPQ was up 45 basis points where NASDAQ was up 44, so they barely beat it. Triple QY beat it worse. Okay, I think it's better to look here, and you can see Triple QY, visually you can see it outperformed the parent. Where, like YMAG dense, you don't have to even look at the numbers or think about it. You get a nice visual representation. Here's the S&P high yield complex. Let's see who did well here. This darn JEPI or JEPY is just making me proud lately. It's one of the most underrated stocks out there. It's actually less risky than JEPI also, but people will argue with me about it, but it is less risky. If your definition of risk is protecting the downside, JEPY has more downside buffer than JEPI. See, iSpy had a nice day. QDTE, that was in line. XDTE, just killing it today. SPY was in line. SPY-T, not a great day. Just got about half the upside of the parent. GPIX, this is the Goldman fund. The Goldman S&P fund had a nice day. XYLD had a nice day. I saw an article today in Seeking Alpha that said XYLD up 9.7. I just read the headline. Up 9.7%, or it pays a 9.7% dividend, and the NAV keeps going up. And I bet I could tell kind of by the headline of the article that it was a good article about XYLD. And there's nothing wrong with XYLD, and I always mention XYLG. I like that one a bunch also. It's just a half-covered call fund by Global X, and it has a ton of upside. You just don't get much dividend. But they're good stocks. If you prioritize the NAV, you have to. That XYLG's a good one to get. XYLD's a good one to get. Lots of these are good ones to get. I don't know why the heck. I like this chart where we could just look at from last Friday. I like to every day see how the week is going so far than just the one day. Those one day Okay, here we go. We got our weekly chart up. Those one-day charts are all right, but a 1 day doesn't mean that much. I mean, you know, but when you get over a longer time frame, and we also look at this over a 30-day time frame. We'll do that in a second. All right. So look at this. Tesla for the whole week is almost outperformed Tesla. Just killing it. Nvidia outperforming. Coney doing great. OARC killing it. AMZ outperforming. It's been a big week for these funds, unless your name is Apple, or AMD hasn't had a good week either. Or in YBTC, well, it's not really the fund. The high yield fund is only down 0.5 point. It's the underlying, which I forget what I used, 6.31. I think I used BITO, or maybe, yeah, BITO is the underlying for YBTC. That's the that's basically just a it's not even a high yield fund. It's just a fund that holds futures and is long Bitcoin. BITO. Then there's one Maxi that is the same thing as BITO, except they also sell S&P calls, I think, and S&P puts. I think they sell S&P iron condors. They do something to get a little extra income, but Maxi is one of the top performing funds of the year last year. And actually, why do I not have Maxi on here? I thought I had Maxi. I used to have Maxi on here. All right, well, I'll put Maxi back on here. No one's griped about it yet, so maybe we don't have that many Maxi fans. The main thing I want to show is the ones that we talk about all the time. Triple QY, but also JEPQ, but also XYLD, and also FEPI killing it, YMAX, YMAG. I just want to have quick access to all of these. All right, well, let's look at the 30-day change here. We haven't checked this out in a while. It disappeared. Let me try this. Let me try to refresh, see if we can get this to rebuild. We can check it out next time. Let's look over here at stock index futures and see how we look for tomorrow. You know, let me see here. We closed on the lows of the day, I think, pretty much, and outside the Bollinger Bands. Well, no, we rallied up to close just inside the Bollinger Band. But, you know, pretty much on the lows of the day. So that, you know, that's usually not real bullish when you close on the lows of the day and outside the Bollinger Band. Just like it's bearish to close on the highs and outside the Bollinger Band. I mean, it's bullish if you close over the highs and on the highs and outside the Bollinger Band. And you saw that play out the past couple of days. It played out from this day to this day. It looks like Nasdaq's grinding 24 hours. I mean, on the 24-hour chart, it looks like same thing with S&P down 2 100ths. Same thing with Russell down 6 100ths. Let's see Bitcoin. I've been watching Bitcoin a bunch lately. I mean, just with you guys. I'm starting to check it because it has such a direct influence on all these things we trade. I'm calling this line the breakout line. They broke out, they came back and retested it multiple times, but then anyway it failed, and now they're underneath it, and they're coming up and checking it from the bottom side, and they did it there and it failed, and they almost did it there, but it appears to have failed. So I'm going to say, just from a technical standpoint, that I'm trying to think if I can make the line 666. It would make it a lot more interesting for 666 doesn't really fit the price action, though. I think I have it in a good spot, or we'd have to ask Mike, the tactical stock scalper. I think maybe right there. I'm trying to draw the neckline basically in the head and shoulders. There's a shoulder, there's a head, there's a that could be a shoulder, or that could be a shoulder. This could be a shoulder, or you can have a smaller head and shoulders where that's the head, that's the shoulder, and that's the shoulder. This could be a head and shoulders. But in any event, I'm going to want to see prices above 68,308. and then it'll be back onto the races with Bitcoin. But for now, they're in some consolidation here. Let's see what else we can look at. Here's a chart of Coinbase. Here's a chart of Misty, or these are Misty's covered calls. They sell covered calls on Mister, so they're still below both of their strikes, it would appear. Yeah, they're still below all three of their strikes. This one profit box is crooked. I need to drag these out further. I kind of underestimated, or misunderestimated, as my favorite Texan George Bush would say. Misunderestimate. Anyway, I'll do the rest of that on my own time. Maybe I won't. Maybe I'll just make you guys watch. All right, I'm going to let you guys go. It's been a long report tonight, but I wanted to talk about that projection on the dividend or the distribution, because that's the one thing that my channel does that I don't think any of the other channels do. There's lots of other channels that predict the dividend, but I keep a running total of it 24 hours a day in my spreadsheet, and I try to keep it right. Occasionally someone will catch an error in my spreadsheet, or last night I caught my own error in my spreadsheet. It was on IWMY. It was saying the dividend was going to be like $1.60 or just something crazy, but I looked in my extrinsic, and I had on this line right here, we got 17 points. We sold an option for 17 points, and for some reason it was putting all 17 points in extrinsic, or because I had a wrong number somewhere. Anyway, it was, but so then I looked at it, and I had a hard time recreating it, because it was a trade that was done in the middle of the day. It's the day that they do 2-day trades on Thursday. The third Friday when options expire, the options expire in the morning on Friday morning. And so what they'll do to have coverage for Friday afternoon, on Thursday night they'll sell an option for Monday. And then Friday afternoon when the market closes, they'll cover that option sometime during the day. They'll cover that option and then sell another one. Well, anyway, it was on that day, so I don't know exactly where the price was when they sold it. So the way I sold it was I put 8 points. Usually extrinsic and intrinsic is close to half and half. I mean, 10-7, 6-8, 11-7, 5-5, 8-6, 10-4, 6-10. You could see it's close enough. So I just threw half of it in there, and that made our estimate come down from like $1.60, or it was just crazy high, to where it is now to $1.14. But $1.14 is still a nice, would still make a nice distribution. Hang on, I just saw something. Trying to get you guys a higher dividend here. No, still $1.14. All right, the dog's barking. I better let you guys go. Have a great evening.